an investment standpoint?
It's a very major development. There's three parts of the energy story. There's the upstream, to use the jargon, which is essentially exploration and production. There's the midstream, which is the pipelines that transports it. And then there's the downstream, which is the energy plants and the manufacturing that actually uses the process. Each piece of that is being impacted by this revolution in technology.
So in terms of ways to invest, I know that you like to see your clients go into master limited partnerships as well as some private equity investments. Why do MLPs make sense in this environment? And that's traditionally been an area where we do see a lot of energy investments are on the MLP side.
Right. The MLPs are essentially the toll roads. They were created out of the 1987 Reagan Tax Reform Act. That structure was allowed. And essentially what they're doing is they're building the pipelines that will allow the transportation of all the natural gas and oil that is now being produced. At the moment right now, the pipelines are just stuffed full. There's very little capacity for more, so people are using boats and trains and trucks, which are all more expensive. So the idea is that they will be building new pipelines, they will be incorporating them into their existing pipeline networks, and that growth story will continue with the master limited partnerships. They have to build out an infrastructure essentially from east to west.
So what kind of returns potentially would we be talking about?
Well, there's an income return and then there's an capital appreciation return. We're thinking, 10 to 12%. I mean, historically earlier it was a little higher, 15 to 16. So we think there's been some growth and maturity in the industry, but I think it's still a long-term play because we just have to build so much of it.
You also like putting your clients into some private equity investments now. What's the exit strategy from the client perspective? Is the hope that some of these companies then go public, or is it really just getting some early financing and returns and then you move away from that PE investment?
It's more of the latter. The PE investments are very illiquid. They're typically 5 to 10 years. So you have to be able to commit your money for that length of time. If you're doing it in the upstream case, you're essentially financing exploration and production, so you're essentially financing the wildcatters to go out and prove that these fields are actually have oil or gas that can be produced. Once they've done that, they're done, and then they turn around and sell the fields up to the major producers, who then incorporate them into their larger fields and actually extract the oil and the natural gas from the fields. So that's a fairly quick turnaround, 2 to 3 years, but those are companies that need financing, and the proceeds from that are then reinvested by the limited partnership.